Over the weekend from July 30th to August 2nd, GE's reverse stock split has finally arrived. In March of 2021, GE's management announced they would like to reverse stock split in order to reduce the number of shares outstanding because they had too many for the size of market cap that they had. Moving to May of 2021, GE's stockholders approved this reverse split in order for this to move forward. Then in June of 2021, GE chose a date for the reverse stock split. They chose the end of July, beginning of August. GE's reverse stock split will take the number of shares from around 8 billion back to around 1 billion. I'm Jonathan. I bring you the market news in context through the lens of believability so you can save time, trade and invest your way, and make money. Leadership at GE has been a in-house business, or keep it in the family style, up until recent years. Jack Welch is a legend in the management and the leadership in the GE world. He has written many books on leadership and on management. He also led GE through many, many years, more than 2 decades. Now, after Jack Welch retired, he was followed by Jeff Immelt. Jeff Immelt was also an insider to GE. He was chosen against other leaders within the organization. He was chosen to take on the mantle to lead GE into the future, into the new century. During Jeff Immelt's reign, GE went through and diversified. They focused a lot on Baker Hughes, which is in the oil and gas space, and Baker Hughes has become a bit of a catastrophe for GE. After Jeff Immelt resigned, John Flannery took over. John Flannery was also an insider, but John Flannery could only survive for 1 year at GE before he was unceremoniously replaced. His replacement is the current CEO of GE, the 12th CEO of GE, Larry Culp. Larry Culp is the first outsider, meaning he was not a member of GE when he was chosen to take over as CEO. He was an experienced businessman, but he was not an experienced businessman within GE, not within GE's culture, not indoctrinated into the GE way of doing things. He still had some struggles, including GE Aviation, which has had problems because of some of their customers, specifically Boeing and Airbus, and this thing called 2020. Even though Larry is so well respected from the shareholders and from Wall Street, I'm waiting to see what he can deliver. I believe the proof is in the pudding, and we have not seen enough results. We've seen him try to get rid of some of these bad businesses, but it's come at a cost. It's also made their company a lot different and caused a lot of uncertainty. One of the reasons why GE has been unloading businesses that have been unprofitable is because of their dividend. GE had been a true legend in the dividend space until they ran out of cash and they can no longer afford to pay their dividend. In 2018, they slashed right through their dividend and they cut it down to 1 cent per share. 1 cent per share. Not a lot for those loyal investors. Why did they keep 1 cent per share? Well, because if they cut it to 0 and stopped paying the dividend, they would no longer be available to be invested in by these funds. And they would also no longer be on the list of dividend payers. They cut their dividend in order to stem the cash bleed because they had to pay out all this cash, sometimes because of fines, sometimes because of bad business, just a lot of negative cash flow that was hurting the entire organization and meant they never had any money to pay out to investors. After this 8-for-1 reverse stock split, it will mean that each share will receive 8 cents per quarter. This will also mean that GE now has the opportunity to continue paying a dividend and lower their dividend, which could mean saving more cash. There is no evidence, only speculation around if GE wants to do this. I think that GE will hold off doing this, hold off cutting the dividend as long as they can. This will be the last case, the absolutely last thing that GE would want to do after this bad news of reverse stock split. They don't want to have another bad story. Quick break. Reports say that Xerox and Citibank are 2 examples of reverse stock splits from fairly large companies that have worked out. These reports make it seem like GE can do it too, and maybe they can. Do we really think they worked out, or did they just survive? Let me know in the comments down below if you're interested in the direct comparison. Citibank, Xerox, and GE. One of the reasons being thrown around for why GE would want to reverse split their stock is because a lot of funds have a minimum price level at which they can buy a stock. And if GE is trading too low, the funds won't be able to buy, or the institutions won't be able to buy into the stock. Now, this is not coming directly from GE. This is being thrown around in the market. As of June 2021, GE is owned by almost 2,000 funds, more than 1,500 in fact. There are already a lot of institutions invested in GE, and it seems to me that this argument from the market is a bit weak. But let's explore further. We see here that institutions sold in 2020, but they have been buying in 2021. They've been buying GE even before GE announced a reverse stock split, so it doesn't seem to have affected their pattern. It seems that GE was on the horizon of the funds even without the reverse stock split. Additionally, we see here that as GE's price plummeted, funds were not disposing of their shares. They maintained, they even added to the number of shares that they were holding on to. This leads me to believe that the argument from the market that GE's stock price being higher will cause more funds to be interested in GE is a bit weak. I don't see the evidence to support this from the announcement until the split. Let's see how GE performed according to market's perspective. We can see here that GE is down a couple of percent. It's almost flat. Not a lot happened between March 10th and the end of July 2021. I am, however, only one voice. There are voices out there saying GE will not fall prey to the same negative implications associated with reverse stock splits. GE will be different. GE is different, and therefore GE will recover. I'm not convinced. I'm waiting to see what the strategy and the implementation of the strategy look like in the coming months and years. My perspective is that the evidence around reverse stock splits shows that they are very negative for companies that reverse split their stock. From New York School of Business, in conjunction with Emory, the data says that a significant proportion of companies are much worse off than their non-reverse split peers in the years following the reverse stock split. From the article in which GE should be different, we can see that reverse stock splits are expected to be bearish. From the opposite perspective, when we see a split, a stock split, we expect that to be bullish. These three aspects cause me to see this reverse stock split as a bearish event in GE's life. That means I'm waiting to see. I'm waiting to see what they deliver and if they can actually turn this around. That's all I have for today. Jonathan out.